If I had $1 for every single time someone slid into my DMs or commented on a video asking me, "Graham, what should I invest in this year?" Well, let's just say I'd already be rich enough to skip making this video entirely. I could be on a private island somewhere sipping on a 20-cent iced coffee and watching my portfolio grow all by itself. But you're not here to watch me retire. You're here because you want to grow your own money, and not just by a little bit. You want to see it expand like a chia pet on steroids, sprouting green returns day after day, week after week. It's about making your money work harder for you than you worked for it. So, today I'm pulling back the curtain. I'm not just giving you some vague advice or telling you to simply buy low, sell high. No, we're going deeper than that. I'm giving you the 5 best investments to make in 2025, and this isn't just based on a gut feeling or some hot tip I overheard at the coffee shop. This is all backed by hard data, undeniable market trends, and a healthy dose of good old-fashioned common sense, which, let's be honest, seems to be a pretty rare commodity these days. We're looking at where the smart money is flowing and why, so you can position yourself ahead of the curve, not behind it. And no, before you even think it, this video isn't just going to be another crypto hype fest, where I tell you to mortgage your house to buy the latest meme coin named after a cartoon animal. I mean, come on, we're more sophisticated than that, right? We've seen the roller coaster of the last few years, and while there's a place for digital assets, which we will get to, our strategy for 2025 needs to be smarter, more diversified, and built on a foundation of real-world value and technological disruption. This is about building sustainable, long-term wealth, not just gambling on a lottery ticket. The goal here is simple: to get rich, but to do it smartly. We're going to break down each investment, explain exactly why it has massive potential for the coming year, and discuss how you, yes, you, can actually get a piece of the action, even if you're starting with just a small amount of money. The opportunities are out there, bigger than ever before, but they won't just fall into your lap. You have to know where to look. So grab a notebook, smash the like button for the YouTube algorithm, and let's get into the investments that could genuinely change your financial future in 2025. First up, let's talk about the elephant in the room, or rather, the artificial intelligence in every room AI and automation stocks. Unless you've been living under a rock for the past few years, or maybe trapped under the weight of an NFT you bought at the peak in 2021, you've noticed that AI is literally eating the world. This isn't some far-off, futuristic concept from a sci-fi movie anymore. It's happening right now, in real time, and it's integrating itself into the very fabric of our economy at a speed that is frankly staggering. The companies building and deploying this technology are positioned for absolutely explosive growth. It's so much more than just asking ChatGPT to write a poem about your cat or come up with some dad jokes to annoy your friends. That's just the tip of the iceberg, the fun party trick that got everyone's attention. The real revolution is happening behind the scenes. We're talking about a fundamental rewiring of how industries operate. Think about logistics. We're on the cusp of seeing fleets of self-driving delivery vans navigating our streets, making e-commerce faster and cheaper than ever before. This isn't a maybe scenario, it's an when, and the answer is very, very soon. And it doesn't stop with getting your packages delivered. Consider the service industry. AI-powered customer service bots are already handling a massive percentage of inquiries for major corporations, operating 24/7 without needing a coffee break. In the legal world, AI is sifting through thousands of documents in minutes, a task that would take a team of human paralegals weeks to complete. They're even starting to draft contracts and provide legal analysis. We're talking about robo-lawyers, and seriously, this is happening. The efficiency gains are just too massive for companies to ignore. Even something as traditional as farming is being completely transformed. Fully automated farms are becoming a reality, with AI-driven drones monitoring crop health from the sky, robotic tractors planting seeds with surgical precision, and automated systems managing irrigation to conserve every last drop of water. This isn't just about convenience, it's about solving real-world problems like labor shortages and food security. The companies providing the software, the hardware, and the infrastructure for this global shift are the ones whose stock prices are set to redefine what we consider a bull run. So the big question is, how do you actually invest in this? It's one thing to say AI is the future, but it's another thing entirely to pick the right stocks that will actually make you money. You can't just throw a dart at a list of tech companies and hope for the best. The smart approach is to think about the ecosystem in layers. At the very foundation, you have the pick and shovel plays. These are the companies that are building the essential hardware that all of this AI technology runs on. Without their products, there is no AI revolution, period. I'm talking, of course, about the semiconductor giants. Companies that design and manufacture the high-performance chips, the GPUs, that are the brains behind every AI model. Think of them as the ones selling the tools during a gold rush. It almost doesn't matter which specific AI application wins in the long run, because nearly all of them will need to buy these powerful chips to train their models and run their services. This makes them a less speculative, more foundational way to get exposure to the entire sector's growth. Their dominance is entrenched, and their products are in ridiculously high demand. The next layer up is the major cloud and software platforms. These are the household names that are providing the infrastructure and the large language models that other businesses are building on top of. Companies like Microsoft with its integration of OpenAI, Google with its DeepMind and Vertex AI platforms, and Amazon with AWS are in an incredible position. They are not just participating in the AI race, they are in many ways the racetrack itself. They own the massive data centers and the cloud computing power that developers and businesses rent to build their own AI tools. Finally, you have the more specialized application-specific AI companies. These are the businesses that are taking this foundational technology and applying it to solve very specific problems in niche industries. Think about a cybersecurity firm that uses AI to detect threats in real time, or a biotech company that uses AI to accelerate drug discovery. While these can be higher risk because their success is tied to a specific product, they also offer the potential for astronomical returns if they succeed in dominating their vertical. Finding these winners requires more research, but the payoff can be a true multi-bagger. Now I know what some of you might be thinking. Graham, haven't these stocks already run up a lot? Did I miss the boat? And that's a fair question. The hype around AI has certainly pushed many of these valuations into the stratosphere over the last year. However, what you have to understand is that we are still in the very, very early innings of this technological shift. The adoption of AI across the global economy is not a one-year trend, it's a multi-decade transformation that will be as impactful as the internet or the smartphone. We are just scratching the surface of what's possible. Think about the internet in the late 1990s. Yes, there was a massive bubble and many companies went bust. But if you had invested in foundational companies like Amazon or Microsoft back then, and held on, you would have seen life-changing returns, even with all the volatility along the way. The same principle applies here. We are witnessing the birth of a new technological paradigm. The productivity gains and new markets that AI will unlock are almost incomprehensibly large. The total addressable market isn't just one industry, it's every industry. Therefore, the investment thesis isn't about timing the market perfectly or catching the absolute bottom. It's about dollar cost averaging into the key players who are building the future. It's about recognizing that the current market capitalization of the entire AI sector is likely a tiny fraction of what it will be in 10 or 20 years. As businesses move from experimenting with AI to deeply integrating it into their core operations, the demand for AI-related hardware, software, and services will continue to grow exponentially. This isn't a short-term trade, it's a long-term investment in progress itself. So don't be deterred by the headlines or the short-term price swings. Focus on the fundamentals. Are these companies generating real revenue? Do they have a clear technological advantage? Are they positioned in a way that benefits from the broad adoption of AI? If the answers are yes, then adding them to your portfolio for 2025 and beyond is one of the smartest financial decisions you can make. The AI revolution is just getting started, and you still have a front row seat to the greatest wealth creation event of our generation. Next on the list, let's shift gears from digital intelligence to a more tangible source of power. The second major investment theme for 2025 is that green is the new gold. And no, I'm not talking about the profit margins on kale smoothies or the sudden boom in overpriced bamboo socks. I'm talking about the unstoppable force of clean and sustainable energy. The sectors of solar, wind, and battery technology are on absolute fire right now. And this isn't just some feel-good trend for environmentalists. This is a story about cold, hard economics and massive government-backed incentives that are creating a tidal wave of investment opportunities. The reality is, The world is undergoing a monumental energy transition. The reliance on fossil fuels that powered the last century is becoming increasingly volatile, expensive, and politically complicated. In response, nations around the globe are racing to build out their renewable energy infrastructure, and they are putting their money where their mouth is. In fact, the US government alone, through legislation like the Inflation Reduction Act, is pouring billions upon billions of dollars in subsidies, grants, and tax credits into this sector. This is a government-fueled tailwind of unprecedented scale. When the government decides to back an industry with that much capital, you have to pay attention as an investor. This isn't just a suggestion, it's a massive market signal. It de-risks private investment and supercharges growth. Companies in the clean energy space are not only seeing a surge in demand from consumers and businesses who want cheaper, cleaner power, but they're also getting direct financial support to build new factories, innovate on their technology, and scale their operations faster than ever before. It's a perfect storm for growth. What this means is that investing in sustainable energy is no longer just an ethical choice. It's arguably one of the most pragmatic and lucrative financial choices you can make for the coming decade. The economics have fundamentally shifted. In many parts of the world, building a new solar or wind farm is now cheaper than continuing to operate an old coal plant. This is the tipping point. When green energy becomes the cheapest energy, its adoption becomes an economic inevitability, and the companies leading this charge are set to reap enormous rewards. Let's break this down into the three core pillars of the clean energy revolution, because each offers a unique investment angle. First, you have solar power. The cost of solar panels has plummeted by over 90% in the last decade, a technological marvel that has made it accessible to everyone from massive utility companies to individual homeowners putting panels on their roofs. This isn't just about the panel manufacturers either. You can invest in the companies that install the systems, the ones that make the inverters that convert the power, or even the firms that finance these large-scale solar projects. Then you have wind power, the silent giant of renewable energy. While solar gets a lot of the residential buzz, massive onshore and offshore wind farms are becoming the workhorses of the new energy grid. These are multi-billion-dollar infrastructure projects. The companies involved here are often industrial behemoths that manufacture the enormous turbines, the blades that can be longer than a football field, and the complex gearboxes that keep them running. Investing here is often a bet on large-scale industrial-grade energy production, and the continued push for a carbon-free electricity grid. But here's the critical piece that ties it all together: battery technology and energy storage. This, in my opinion, is where some of the most explosive growth will be. The biggest criticism of solar and wind has always been their intermittency. The sun doesn't shine at night, and the wind doesn't always blow. Energy storage solves this problem. Grid-scale batteries allow us to store the excess energy produced during peak sunny and windy times, and release it when it's needed most. This technology is the key that unlocks the full potential of renewables. The demand for batteries is absolutely insatiable. It's not just for these huge grid-scale projects, it's also for electric vehicles, home energy storage systems, and consumer electronics. Companies that are mining the essential raw materials like lithium, those that are innovating on new battery chemistries to make them cheaper and more efficient, and those that are building the gigafactories to produce them at scale are at the epicenter of this energy transition. Investing in battery tech is a bet on the enabling technology for this entire green revolution. Okay, so you're convinced. Clean energy is a massive opportunity, but you're not a venture capitalist or an industrial tycoon, so how do you, the individual investor, actually get a piece of this multi-trillion-dollar pie? The good news is, it's more accessible than ever. The most straightforward way is through exchange-traded funds, or ETFs. There are numerous ETFs that are specifically focused on the clean energy sector. For a very low fee, you can buy a single share and instantly own a small piece of dozens of different companies across the entire value chain. There are broad, clean energy ETFs like ICLN or QCLN that give you exposure to a mix of solar, wind, and other renewable sources from around the world. There are also more specialized funds. For example, you can find ETFs that focus specifically on solar energy companies, like the TAN ETF, or ones that are dedicated entirely to the battery technology and lithium mining space, like the LiT ETF. This allows you to tailor your investment to the part of the sector you are most bullish on, all while maintaining diversification and reducing single stock risk. For most people, this is the smartest and easiest way to start. Of course, if you're willing to do more research, you can invest in individual companies. You could look at leading solar panel manufacturers, residential solar installers like Sunrun, or the industrial giants that build wind turbines. You could also research the key players in the battery supply chain, from the lithium miners to the battery manufacturers themselves. This approach carries more risk, as your success is tied to the performance of a single company, but it also offers the potential for much higher returns if you pick a winner early on. Ultimately, the key is to recognize that this is a long-term trend. There will be volatility, there will be winners and losers, and policy changes could create short-term headwinds. But the overall direction is clear. The world is moving towards clean energy, and the amount of capital flowing into this space is staggering. By dedicating a portion of your 2025 investment portfolio to this sector, whether through a diversified ETF or a few carefully selected individual stocks, you are positioning yourself on the right side of one of the biggest economic and technological shifts in modern history. Alright, let's get into the third investment, and this one is near and dear to my heart because it's how I got my start and built the foundation of my own wealth. We're talking about real estate, but not in the way your parents or grandparents probably think about it. Forget the traditional idea of saving up for 20 years just to afford a 20% down payment on a single-family home in the suburbs, only to become a slave to a 30-year mortgage and endless weekend yard work. That model is becoming less and less accessible and honestly, less and less profitable for the average person just starting out. The game has fundamentally changed, and the strategies that worked in 1995 or even 2015 are now being completely reinvented by technology and new investor mindsets. The barrier to entry for real estate used to be astronomically high, a massive wall of capital that kept most people out. You needed perfect credit, a huge pile of cash for the down payment, another pile for closing costs, and then a reserve fund for when the water heater inevitably decides to explode at 3 in the morning. It was a club for the already wealthy, but today that wall is crumbling down, brick by brick. We're entering an era where you don't need to be a millionaire to invest in high-quality income-producing properties. The entire industry is being democratized, broken down into smaller, more digestible pieces that almost anyone can participate in, sometimes with as little as $100. So, what does this reinvention actually look like? It's about being smarter, more strategic, and leveraging technology to do the heavy lifting for you. It's about portfolio diversification within real estate itself. Not just owning one property, but having a slice of many different types of properties across different geographic locations. Think about it. Instead of putting all your eggs in one basket with a single rental condo in Miami, what if you could own a small piece of an apartment complex in Austin, a commercial warehouse in Ohio, and a portfolio of short-term rentals in Scottsdale? This level of diversification was once only possible for massive private equity funds, but now it's available to you, right from your phone. The key takeaway here is that the mindset has shifted from ownership for the sake of ownership to investing for cash flow and appreciation with maximum efficiency. It's no longer just about buying a house to live in and hoping it goes up in value over 30 years. The new school of thought is about treating real estate as a true numbers-driven business from day one. It's about finding opportunities where technology can create an edge, where new regulations open up possibilities, and where you can get the benefits of property ownership, the cash flow, the tax advantages, the equity buildup, without all of the traditional headaches and massive upfront costs that used to make it so intimidating. So let's break down the first way you can get in on this action: REITs, or real estate investment trusts. For those who aren't familiar, a REIT is basically a company that owns, operates, or finances income-producing real estate. Think of it like a mutual fund, but instead of holding a basket of stocks, it holds a portfolio of properties: shopping malls, office buildings, data centers, apartment complexes, you name it. When you buy a share of a REIT, you become a fractional owner of all those properties, and the best part is, by law, REITs have to pay out at least 90% of their taxable income to shareholders in the form of dividends. It's one of the most passive ways to earn real estate income. The beauty of REITs is their liquidity and simplicity. You can buy and sell them on the stock market just like you would a share of Apple or Tesla. There are no tenants to call you about a clogged toilet, no property managers to deal with, and no surprise maintenance bills that wipe out your profits for the year. You get instant diversification across dozens or even hundreds of properties, managed by a professional team whose entire job is to maximize the value and income of that portfolio. This is perfect for someone who wants exposure to the real estate market and its steady cash flow potential without becoming a hands-on landlord. Plus, you can start with a very small amount of money, literally the price of a single share. Now let's take this concept a step further with something even more direct: fractional ownership platforms. These are companies that are popping up everywhere, like Fundrise, Arrived Homes, or Landa. What these platforms do is identify a specific property, say a single-family rental home in a growing city. They buy it with cash, and then they sell off shares or fractions of that home to individual investors through their app. So for as little as $50 or $100, you can own a direct, tangible piece of a specific house. You get to see the address, the pictures, the financials, and you receive a portion of the rental income and any future appreciation when the property is eventually sold. This is a complete game changer because it gives you the direct ownership benefits that a REIT might not. With a REIT, you own a piece of a massive, faceless portfolio. With fractional ownership, you can build your own custom portfolio of individual properties that you've personally vetted and chosen. You can say, I own 0.5% of 123 Main Street, and watch as the rent checks come in each month. It bridges the gap between the passive nature of a REIT and the direct control of traditional ownership, giving you a powerful hybrid model that offers diversification, low cost of entry, and a clear, tangible connection to the asset you're investing in. It's landlording for the 21st century. Alright, now for those of you who are a little more ambitious and are willing to be a bit more hands-on for a potentially much higher return, let's talk about the Airbnb hybrid model. This is where things get really interesting and where you can generate some serious cash flow. We're not just talking about buying a property and putting a long-term tenant in it for a year-long lease. We're talking about strategically using properties for short-term and mid-term rentals, which can often generate 2 to 3 times the revenue of a traditional rental. The hybrid part of this model is key. It's about flexibility and optimizing for demand. Here's how it works. Instead of being locked into a single strategy, you adapt your property to the market's needs. Maybe you furnish a property and list it on Airbnb and VRBO to capture the high-paying tourist and vacation crowd during the peak season. But during the slower months, you pivot. You can switch to platforms like Furnished Finder to attract traveling nurses, corporate relocations, or film crews who need a place to stay for 1 to 3 months. This mid-term rental strategy provides a stable base of income when the tourist traffic dies down, giving you the best of both worlds, the high daily rates of short-term rentals and the stability of longer-term tenants. The profit potential here is enormous, but it does require more work. You're not just a landlord, you're a hospitality provider. This means you have to think about furnishings, professional photography, managing bookings, communicating with guests, and coordinating cleanings between stays. It's an active business, not a passive investment. However, technology has made this infinitely easier than it used to be. You can use dynamic pricing tools to automatically adjust your nightly rates based on demand, smart locks for keyless entry, and messaging automation to handle guest communication. You can even hire co-hosts or virtual assistants to manage the day-to-day operations for you, turning it into a more semi-passive income stream. The real secret to succeeding with this model in 2025 and beyond is to find properties and markets with diverse demand drivers. Don't just buy in a pure vacation town that's dead for 9 months of the year. Look for cities with universities, major hospitals, corporate headquarters, and a strong tourism industry. This ensures you have a constant pipeline of potential renters, whether they're students, traveling professionals, vacationers, or families in transition. By creating a flexible property that can cater to all of these different groups, you insulate yourself from risk and maximize your occupancy and revenue year-round. It's more work, yes, but the returns can be absolutely life-changing. Alright, let's get into what is, without a doubt, the single most powerful and highest return on investment asset that you will ever own. And no, it's not a stock, it's not a rental property, and it's definitely not some obscure cryptocurrency that promises to go to the moon. The best investment, the one that can never be taken away from you, the one that a market crash can't wipe out, and the one that will compound faster than anything else you can possibly imagine. is the one that's sitting right between your ears. I'm talking about investing in yourself, specifically in high-income skills. Because let's be real, the amount of capital you have to invest in the first place is directly tied to your ability to earn an income. Think about it this way. If you have $1,000 to invest, a phenomenal, once-in-a-lifetime 100% return gets you another $1,000. That's great, but it's not life-changing money. But if you invest that same $1,000 or even just your time into learning a skill that adds an extra $1,000 to your income every single month, you've just generated a $12,000 a year return. That's a 1,200% annual return on your initial investment, and it keeps paying you, month after month, year after year. That's the kind of leverage that creates real wealth, and it's completely within your control, which is the most beautiful part of it all. The job market of 2025 and beyond is not going to be the same as it was even 5 years ago. It's evolving at an incredible pace, and the people who are going to win, and win big, are the ones who adapt. The traditional path of getting a degree and working the same job for 40 years is becoming a relic of the past. Companies are increasingly looking for specific demonstrated skills rather than just a piece of paper. They want people who can come in and immediately add value, people who can solve problems, people who can generate revenue, and they are willing to pay an absolute premium for that talent. Believe me, this is where the opportunity lies for anyone willing to put in the work. You don't need to go back to a 4-year university and take on tens of thousands of dollars in debt. The internet has completely democratized education. You can learn almost anything from coding complex algorithms to persuasive copywriting to advanced digital marketing funnels, often for a fraction of the cost of a single college textbook. The barrier to entry for acquiring these high-income skills has never been lower, but the potential reward for mastering them has never been higher. It's the ultimate arbitrage opportunity of our time. So what are these magical skills I'm talking about? Let's break down the 2025 high-income skills stack. First up, and this should be no surprise, is anything related to artificial intelligence. I'm not just talking about being an AI engineer with a PhD from MIT, although that certainly pays well. I'm talking about practical skills like AI prompting, learning how to effectively communicate with these powerful language models to get the exact output you need, or becoming an AI implementation consultant for small businesses, helping them integrate AI tools to cut costs and improve efficiency. These are skills you can learn relatively quickly, and they solve a massive growing need in the market. Next on the list is the timeless art and science of sales and marketing, but with a modern twist. I'm talking about digital marketing. Understanding how to run profitable ad campaigns on platforms like Google, Meta, and TikTok is a superpower. Knowing how to build a sales funnel that converts clicks into customers is a license to print money. And let's not forget copywriting, the ability to use words to persuade people to take action. Every business in the world needs customers, and if you are the person who can bring them in the door, you will never ever be without a high-paying opportunity. These skills are evergreen. Then we have the more technical side of the spectrum like coding and data analysis. Now before you click away thinking it's too complicated, hear me out. You don't need to become a senior developer at Google. Learning the basics of a language like Python can allow you to automate tasks and analyze data in ways that make you incredibly valuable. Or what about learning how to build websites on platforms like Webflow or Shopify? Businesses pay thousands of dollars for a professional website, and it's a skill that's in constant demand. The ability to create and manipulate things in the digital world is a fundamental skill for this decade. And finally, don't sleep on content creation itself. Yes, what I'm doing right now. Building a personal brand, creating valuable content on platforms like YouTube, TikTok, or a newsletter, and monetizing it through ads, sponsorships, or your own products is a legitimate and incredibly scalable business model. It requires a blend of skills: video editing, writing, marketing, and being comfortable on camera. But the upside is virtually unlimited. You're not just earning an income, you are building an asset, a brand, and a community that you own. It's the ultimate fusion of skill and entrepreneurship. Okay, so you're sold on the idea. You understand that investing in yourself is the key, but how do you actually do it? What's the step-by-step plan? The first step is what I call the curiosity audit. Spend a week or two just exploring. Watch YouTube videos, read blog posts, and maybe take a few free introductory courses on platforms like Coursera or EDX in the areas we just discussed. Which topics genuinely excite you? Which ones do you find yourself thinking about even when you're not actively studying them? Don't just chase the money. You need to find a skill that aligns with your interests and personality because that's what will give you the motivation to push through when it gets difficult. Once you've identified a skill that sparks your interest, it's time to commit. And I mean really commit. This doesn't mean you need to quit your job tomorrow. It means carving out dedicated, non-negotiable time in your schedule to learn. Maybe it's 1 hour every single morning before work, or 2 hours every evening after the kids are in bed. The key is consistency. Treat it like a part-time job, your job of building a better future for yourself. Find a high-quality, comprehensive course on a platform like Udemy or a specialized boot camp and immerse yourself in it. Your goal is to go from zero to proficient as efficiently as possible. As you're learning, you must immediately start applying. This is the step most people skip, and it's a fatal mistake. Knowledge without application is just trivia. If you're learning to code, start building small projects. A simple calculator, a to-do list app, anything. If you're learning copywriting, start a blog, or offer to rewrite the homepage for a local business for free. You need to build a portfolio of work. This does two things. First, it solidifies what you've learned in your brain like nothing else can, and second, it gives you tangible proof of your abilities that you can show to potential clients or employers. Finally, start monetizing even on a small scale. Don't wait until you feel like a perfect expert because that day will never come. Get on a freelance platform like Upwork or Fiverr and start taking on small, low-stakes gigs. Your first goal isn't to get rich, it's to get your first paying client. That first dollar you earn from your new skill is an incredibly powerful psychological milestone. It proves that your investment is working. From there, you just rinse and repeat. Keep learning, keep applying, keep building your portfolio, and slowly increase your rates as your skills and confidence grow. This is the flywheel that will transform your earning potential. Alright, let's talk about the elephant in the room. When I say digital assets, I know exactly what many of you are thinking: cryptocurrencies. You're picturing dog coins, laser eyes on Twitter profiles, and stories of people who either became millionaires overnight or lost their life savings on a coin named after a squid. The crypto space has, for a long time, felt more like a wild, unregulated casino than a legitimate asset class. And honestly, for a large part of it, that reputation was well-deserved. The era of buying a random coin just because it had a cute dog on it and hoping it would 100 times is, for the most part, coming to an end. The speculative frenzy of 2021 was driven by hype, retail FOMO, and an ocean of easy money. It was a classic bubble, and like all bubbles, it popped. But what's left in the aftermath is what's truly interesting. The tourists have gone home, the get-rich-quick crowd has moved on, and the people who are still here are the builders, the developers, and the serious investors who see the underlying technology for what it is: a revolutionary new infrastructure for finance, ownership, and the internet itself. The smart money is no longer gambling on memes. It's making calculated investments in the foundational layers of this new digital economy. So, what does a smart approach to digital assets look like in 2025? It means shifting your focus from speculative tokens to projects with real-world utility. It means asking critical questions before you invest a single dollar. What problem does this project actually solve? Who is the team behind it, and what is their track record? Does it have a clear business model and a path to generating revenue? Is there a genuine community of users and developers, or is it just a Telegram group full of people spamming rocket emojis? This is fundamental analysis just like you would apply to a stock, but tailored for the unique aspects of the digital asset space. This evolution is crucial because it separates the signal from the noise. It moves crypto from a purely speculative bet to a legitimate part of a diversified, forward-thinking investment portfolio. We're talking about investing in the digital equivalent of the companies that built the railroads or the fiber optic cables for the internet. These are the picks and shovels of the new digital gold rush. It's a much less glamorous approach for sure. It won't give you the same dopamine hit as a 1000% gain in 24 hours, but it's an infinitely more sustainable and, in my opinion, more profitable strategy for building long-term wealth in this asset class. One of the most powerful and, frankly, most exciting applications of blockchain technology is the concept of tokenization. And no, this has nothing to do with Chuck E. Cheese. Tokenization is the process of creating a digital representation, or a token, of a real-world asset on a blockchain. Think about things like real estate, fine art, private equity, or even a share in a racehorse. Historically, these have been highly illiquid assets accessible only to the ultra-wealthy. You can't exactly sell 1/1000th of a Picasso painting on a whim, or at least you couldn't until now. Blockchain technology changes this entire paradigm. By creating a digital token that represents ownership of a fraction of that asset, you can suddenly make it divisible, tradable, and accessible to a much wider pool of investors. Imagine being able to buy a $500 token that represents a fractional ownership stake in a commercial office building in downtown Manhattan. You would receive a proportional share of the rental income and any appreciation in the property's value, and you could trade that token on a secondary market 24/7, just like a stock. This is not science fiction. This is happening right now. The implications of this are absolutely massive. For investors, it unlocks access to previously unattainable asset classes, allowing for greater diversification and new opportunities for returns. For asset owners, it provides a new way to unlock liquidity from their holdings without having to sell the entire asset. A real estate developer could tokenize a new building project to raise capital from a global pool of investors, rather than being limited to traditional banks or private equity firms. It creates a more efficient, transparent, and global market for all types of value. As we head into 2025, we're going to see this trend accelerate dramatically. We're seeing the emergence of regulated platforms that specialize in tokenizing real-world assets, or RWAs. These are not speculative ventures. They are fintech companies bridging the gap between traditional finance and the world of blockchain. Investing in the equity of these platforms, or in the foundational blockchain protocols that enable this tokenization, is a way to bet on the entire trend without having to pick individual tokenized assets. It's an infrastructure play on the future of finance, and it's one of the smartest ways to get exposure to the digital asset space. If tokenized assets are the valuable goods being transported in this new economy, then the blockchain protocols themselves are the highways and railroads they travel on. This is the foundational infrastructure layer, and it's where a lot of the long-term value will likely accrue. I'm talking about the base layer blockchains, often called layer 1s like Ethereum, and the scaling solutions built on top of them, known as layer 2s. These are the platforms that developers build on top of, and where all the transactions actually take place. Their value is directly tied to their utility and adoption. Think of it like this. During the internet boom of the late 90s, you could have tried to pick the winning e-commerce website out of thousands of contenders like pets.com. Or you could have invested in a company like Cisco, which was building the routers and switches that the entire internet ran on. No matter which website won or lost, they all needed Cisco's hardware to function. Investing in the core blockchain infrastructure is a similar thesis. You are betting that the overall trend of decentralization and on-chain activity will continue to grow, regardless of which individual application becomes the next big thing. So, when you're evaluating these infrastructure plays, what should you look for? First, look at the developer activity. Are talented developers actively building new and interesting applications on this platform? A blockchain without developers is like a city with no people. Second, look at the transaction volume and the number of active users. Is the network actually being used, and is that usage growing over time? These metrics are the lifeblood of a healthy protocol. Finally, look at the security and decentralization of the network. A truly robust blockchain needs to be resistant to censorship and attack. This approach requires a bit more research than just buying Bitcoin, but the potential upside is significant. You are investing in the technological backbone of a new financial system. This includes the layer 1s that provide the ultimate security and settlement, the layer 2s that make transactions fast and cheap for everyday users, and other critical infrastructure pieces like decentralized storage solutions and data oracles. It's a holistic view of the ecosystem. By focusing on the essential, non-negotiable infrastructure, you position yourself to benefit from the growth of the entire digital asset space in a much smarter, more calculated way. So there you have it. 5 of the biggest investment opportunities that I believe will have the potential to create serious wealth in 2025 and beyond. We've covered everything from the undeniable march of AI and automation to the massive government and private sector push into sustainable energy. We talked about reinventing your real estate strategy for the modern era, the unparalleled ROI of investing in your own high-income skills, And finally, how to approach the world of digital assets with a smart, infrastructure-focused mindset. It's a lot to take in, I know, but being aware of these trends is the first step toward taking advantage of them. Now, the most important part of this entire video is what you do next. Knowledge is only potential power. Action is what turns it into real results. So I want to know, which of these 5 investment areas are you most interested in or excited about? Are you ready to dive into the world of AI stocks? Are you looking to buy your first fractional share of a rental property? Or are you fired up to finally learn that high-income skill you've been thinking about? Let me know down in the comments below. I read every single one, and I'm genuinely curious to see where your head is at. And listen, if you've made it this far into the video, you are clearly part of the small percentage of people who genuinely care about building a better financial future. That dedication is rare, and it's the single biggest predictor of success. So, do your future self a massive favor right now. Go ahead and smash that like button for the YouTube algorithm. It costs you nothing, and it helps the channel out tremendously. Make sure you subscribe for more weekly investing insights just like this, so you don't miss out on the next big opportunity. And of course, the final step, you know what to do. Turn on that notification bell, that way, you'll be the first to know when a new video drops. Because trust me, the last thing you want is for your very wealthy future self from 2030 to build a time machine just to come back and send you an angry email for missing out. Thank you so much for watching, and as always, I will see you in the next video.